So hello everyone, this is my third session time today. So I'll gradually get used to how to run a session now as a moderator. I was very happy to run this one too. Okay, so before starting the session, actually it's Matteo, Essential one. Unfortunately can't join this session because of his flight is delayed. So we have 3 panelists here today, and we are discussing about the future of the protocol. So for now, we have a lot of platform software player in the blockchain right now, and then every people focus on building a new protocol, not about original protocol, but also how we can communicate each protocol together to build the standard in communication methodology on the blockchain technology right now. And then for discuss this session, we have 3 panelists. So could you guys introduce yourself first?
Yeah, my name is Jack Liu. I'm the founder and CEO of Wanchain. We had a booth outside. I guess everybody have seen it. We are trying to create a protocol between all these new blockchains, and we're trying to create a network, a wide area network of blockchains.
My name's Matthew Spoke. I'm the founder of the AION project. Together with Jack, we actually work on something together called the Blockchain Interoperability Alliance, but the AION protocol is focusing on how do you create kind of a routing messaging system to be able to prove that events have taken place on different blockchains very generically rather than specifically to financial assets, but just to any type of data or event that takes place on one of these distributed networks. How can you use the proof of that event to trigger a transaction on another network efficiently? So that's kind of the broad strokes of what we're trying to build at AION.
Hello, everybody. My name is Andrew Hyde. I live in Boulder, Colorado. I work at Origin Protocol as the head of community. Origin is building the sharing economy, but in a decentralized way without any intermediaries. We're trying to build like an Airbnb, Uber, et cetera, where there's rating reviews and more of a booking engine based on blockchain. We have 38 partners building on our tech and hopefully a lot more, but we're doing kind of more of a consumer-facing user experience for blockchain.
Cool, great. So let's start from these very basic questions from my side. So I think the blockchain has, right now, it's mainly 2 directions. One is about public blockchain, and the other one is permission blockchain. And actually, I used to work for the permission blockchain side. And what do you think about the future of each, and which is more innovative?
I'll take that one because yesterday, actually, I gave a speech about how to connect with the public chains as well as permission chains. Mm-hmm. As I see it, public chains, the data, all the assets are growing very fast. And at the same time, in a separate universe, all the new enterprise solutions also are building, mm-hmm. right? So they are growing slowly, but we all see that it's very valuable. And in the permission blockchain world, we have many solutions. And Wanchain we also have a local area network. We also have our own enterprise solution. But at the same time, we have Hyperledger. We have EA Enterprise Ethereum solution for enterprise. And there are many others, right? So for these 2, I think all of them will be targeting different requirements. I mean, in the enterprise world, a lot of times you need to have high performance, right? Mm-hmm. For example, for the tourism or for gaming, or for e-commerce world, mm-hmm. All the transaction TPS has to be very, very high. Right. So, and at the same time, you don't want to sacrifice too much of the security or decentralization at the same time, right? So what we're trying to do is we build a bridge or build a network of blockchain, including the public network, or the public blockchains, and also the permission private chains at the same time. And using the computation power from the public chains, strongest, of course, the Bitcoin or Ethereum, and including Wanchain, will supporting all these networks will support each other and reduce the energy consumption probably for mining, and just use the very simple mechanism as anchoring, as I mentioned yesterday. Essentially, it's like you are doing the accounting books, you're doing the smaller accounting books in a small company. At the same time, after a certain period of time, you report the summary back to the bigger ledger, or more powerful ledger. And for the smaller networks, they support each other and create this interlocks, and will make the whole network stronger.
Got it. So which means that, in your opinion, the public blockchain and the permission blockchain can be like complementary each other to maintain an entire financial system. Got it. Interesting. Yeah.
Yeah, I mean, just to add to what Jack was saying, and we were involved in this very early on at the Enterprise Ethereum Alliance, focusing on building a private implementation of Ethereum, essentially. There was a number of companies doing that kind of throughout 2015, 2016, and some continuing into 2017. I think two realizations along the way. One, the enterprise market is moving slowly, and probably not as a result of them, but as a result of us not solving their problems fast enough. You know, this industry has massive infrastructure challenges that make it impossible to migrate the types of large-scale business processes that Jack was just mentioning a few of onto these systems. So it's not, hey, look at these slow-moving giants, they can't adopt new technology. It's look at this new technology, it can't mature fast enough. And so we have a lot more infrastructure work to do. I mean, when we look at this spectrum of private to public, it used to be almost like one versus the other. I think we're realizing now they are definitely more complementary, and they almost live on a spectrum of certainty. They live on, if you want perfect certainty, you go to a very, very decentralized public network, and it gives you, near perfect certainty. If you're comfortable with your counterparts on a network, and you're okay with, less than perfect certainty because there's a layer of established trust already, then you're on the other end of the spectrum. And layered on top of that is the fact that, and I think this was it's still a little bit of a miss that we're seeing some enterprises kind of shift out of, is the fact that you can't just look at blockchains as being interesting technical innovations. They are significantly more than that, and notably, they're economic innovations. They're innovations that allow you to incentivize behavior towards a common outcome, right? Towards a desired outcome on a network. So stripping away the economic layer of these networks, which is what used to be the conversation around private blockchains, is not good enough on its own. It can exist as a scaling solution. It can exist as a way to achieve performances and apply certain rules and restrictions in a network, but on its own, it misses a significant part of the value of these systems, which is economically incentivizing a crowd-powered network rather than centralized institutions just kind of having to pay significant amounts of money to manage infrastructure the way they have historically.
I see. Yeah. I think I have a kind of additional question on that. For Matt. So, in my understanding, the critical difference between public blockchain and permission blockchain, whether that blockchain has proof of X or not. So from that perspective, I'm kind of curious about, do you think it's possible to apply some idea of the proof of X, which is like an economic incentive model, into the permission blockchain world?
Yeah, and I think, one of the things that we have to still figure out, there's still some people that strongly hold the belief that all enterprise applications and processes will eventually migrate onto public networks, and yet to be seen if that's true or not. So what you could imagine is that on top of public networks, you could have second layer protocols that allow you to kind of stake into a permissioned ecosystem that sits on top of a public network. So it doesn't need to be that they're mutually exclusive from each other. So you can say, well, with a particular stake or restriction on top of a public network, I'm only going to allow a particular list of white labeled addresses to participate in this ecosystem, for example. So they might be separated from each other and then leverage some sort of interoperability solution along the lines of what we're building or what Wanchain's building, or they might be second layer protocols on top of public networks. You do need a mechanism to allow for a group of counterparties to agree. So all of these systems come down to consensus. There are consensus functions that are best used for a group of people who don't know each other, and there are other consensus functions that are best used for a group of people who do know each other, and they just need a kind of simple way to vote and agree on a regular basis. So that's, it's at that layer that you see most of the differences between private and public networks.
Right, interesting. So which means that probably we can see some kind of custom use cases by using like at the Plasma Cache or Lightning Network in the specific use case in permission blockchain world. That's very interesting. Yeah, go ahead.
And let me add on something that I didn't see covered by those two answers, which is in the industry, I think we want to just keep on saying blockchain and supporting the technology without realizing that a lot of the private blockchains I'm seeing are just SQL databases. Right? Yeah. And there's no need to kind of use that added layer without just realizing you want to pick the best technology to meet the needs of your users. And in many cases, that's not going to be blockchain.
Yeah, right. Very true. I agree with that. Right. Okay, let's move to the next question stuff. So this is actually related to the proof of work stuff. So I think everyone wants to know. So Ethereum, moving to the proof of stake, Casper, it's based on the proof of stake and from the proof of work. So it's a very, very fundamental question. What's trade-off between proof of stake and proof of work? Who wants to first?
I mean, let me start one layer up. I think what's really encouraging at this stage of the industry is that we can run parallel global experiments with the capital to support them, right? So that means people have hypotheses on technical design and on economic motivations for how people will interact in a system. And we have the flexibility to design all sorts of parallel systems that prove or disprove these hypotheses. So all the criticisms around Ethereum Classic back in 2016 launching or forking off of the Ethereum network, I actually think it's turned out to be a really great opportunity to experiment two different economic models side by side. All else being relatively equal, we can test the behavior of users in one economic design and the behavior of users in another economic design. The reality is that with all the research and theorizing that we can do ahead of launching a system, we only really learn its implications after launching the system, right? And then we have to figure out how to adjust from there if we guessed wrong, if we had the wrong hypothesis. The big criticism in the proof of work world today, obviously, is computing power. The heavy cost of computing power to run networks like Bitcoin. I think there's some legitimacy to that claim, but I also think that we miss out on why there's an expensive cost of computing to run the Bitcoin network. There's intended to be a very, very expensive barrier to entry to take over this network and damage it, right? So, and what never gets brought up in the conversation about criticizing the cost of mining in Bitcoin is we don't have the statistics to be able to point to the cost of electricity powering the global Visa network or the powering global banking infrastructure. You can probably bet that it's equivalent and or larger than the cost of operating the Bitcoin network. So I don't see it necessarily as a net negative. I think there are interesting trends that should get brought up in the industry. Cost of electricity in many cases is on a curve potentially to near zero with new types of renewable energies being tested. What does that do to the economics of the Bitcoin network if electricity is not a constraint? Then is it still as secure as it was designed to be? So I think there's a reason that we should be challenging the status quo of proof of work. But I don't think that it's simple enough to say, well, it's expensive and consuming of energy, therefore it's bad. Because I think part of its security comes from the fact that it's expensive and consuming of energy. Proof of stake, one of its criticisms in different implementations, it applies differently, is essentially allowing participants with significant financial assets to dictate the direction of the network in some cases if they're bad actors. One of the risks in the proof of work network around essentially there being nothing at stake if you're dishonest, you don't lose anything if you're dishonest, is one of the things they're trying to solve for in proof of stake. So that there is not only an incentive for being honest, but also a disincentive for being dishonest. And that I think is an interesting twist to the economic design of these systems. But again, I think we'll have to see a live implementation of Casper before we know, perfectly well what the outcome is.
That's good. Yeah.
We have been watching very closely about Casper progress, and Wanchain, our team is trying to implement POS at the same time, right? And we understand that this is a very challenging issue, right? Many teams have tried, with a simpler mechanism in the past, but POS itself is quite complicated because economic or incentive mechanism, how to make the network secure, right? Stake meaning really, in today's world or Casper's world, really it's $1, 1 vote, right? in a traditional sense, right? And we want to design a system that there's some kind of a check and balances and really make it decentralized at the same time, make the network secure. And we all know POW has been out there, right, since Bitcoin and has been tested. And Ethereum used the same mechanism for the past few years. And it's simple and it works, right? Okay. So, but we are moving, as Matthew pointed out, the whole community thinks that we need to, figure out a new way, right? New consensus mechanism. And POS has been out there for many years as well, right? We just have to figure out what is the right mechanism, security deposit, and sometimes, there's a collusion problem as well, right? And there are many complicated issues out there. So, but we think that stake, at the same time, could be more than just dollars, right? We're trying to figure out, incorporate more things. As a stake owner of this network, you want to maintain the security, and we're trying to incorporate more than just the security deposit. Yeah.
Got it. Yeah.
Go for it.
Well, I mean, just to add to Jack's point quickly, I mean, I think one of the challenges is realizing that the limitation to some is not the limitation to everyone. So if you're massively wealthy and proof of stake is the only security mechanism, then it might not have the same impact on you, right? Because you might be willing to spend the money to break a system. So we need to think about what are the motivations of different types of participants of these networks. So the way we've thought about it is our intended final consensus algorithm relies on 3 different types of, call them asset classes. And it's not really asset, but it essentially comes down to what am I willing to put at risk and what am I willing to lose. So in some cases, money might be the right motivator. In other cases, it's computing power, which I guess can kind of translate to money because there's a cost of operating computing power. And the third aspect that we're really interested in is reputation. For some, money will not be the issue, but reputation will be more important. So you're starting to hear of networks today like proof of authority networks, where the entire security of the network relies on the reputation of those supporting the network, right? So their willingness to break the system has to come with willingness to kill their reputation. And I think if we find the right balance between reputation, money, and compute, we could find a really nice equilibrium to make sure that regardless of who the participant is, what motivates them, we still find a way to economically incentivize them, but also make sure that they have a disincentive, financial or otherwise, to not act badly in one of these networks.
I think, I would like to ask an additional question on that. Because, I think, the timing of the Ethereum is moving to the proof of stake is one of the key issues we have to think about it. The reason, if the Ethereum take the proof of stake from their initial start, do you think it'd be successful? Because, which means that the most very, very small community where Ethereum, like Bittrex, any other founder, and also any other, ICO investor only hold the, Ethereum token as a proof of stake. Kind of, as you said, it's a dominant player in the Ethereum community. So, but now Ethereum is most of the Ethereum token is distributed to I don't know, 50,000 smart contracts, and also they built a lot of Quantasap, any other ecosystem players coming up, and then now their market cap is $40 billion or so. So it's quite difficult to dominate the Ethereum entire ecosystem. What do you think about this point? Anyone? Yeah. Yeah.
Maybe a little bit of let's just look at the industry. I mean, I saw a joke earlier today, which was I'd rather have 20,000 Bitcoin and $80 transaction fees than what we have right now. We have it pretty good right now, right? And I think that if I were to take a critical look at the community around the entire tech ecosystem, everybody pretty much wants it to be better and is financially incentivized to work together on this. Right. Whether if we're working together cross-chain or just on our own projects. If you're trying to get, we all rise together, and I think the blockchain community as a whole still has that magic. We're still on the same team. Everybody in this room, we're still on the same team. And there's very few coins out there that are actually trying to make sure that they're the best and everybody else is not. So, in a year, are we going to be having the same exact conversation? Are we going to be talking about how Casper knocked it out of the park and we're all using that now, or Lightning Network had a flaw, or maybe.
Right.
But hopefully we're going to see that trend, and we can be absolutely collaborative in that success. And I think that's a really important thing to kind of take a step back and realize that, yeah, there's going to be missteps. We are going to see one of these solutions that should have fixed everything not. And we need to be okay with that and then support those that are trying to make that.
I see. Right. So let's move to the next question. So yeah, it's actually kind of related to the interoperability issue. So what do you think about the future of proof of X? Any kind of new interesting or practical idea about new proof of X something? Recently, actually, I found a news article about the proof of activity. It's kind of hybrid model between proof of work and proof of stake. Any other new information? You guys have it right now? Anyway.
I think there's, again, all of these things are, what I find really funny about this is, we were talking about this yesterday, cryptographers must be like out of their minds happy because for the first time in the world, everybody wants to be a cryptographer. Everybody wants to solve cryptographic problems. This used to be an industry that did not get much attention. Now the superstars of our industry are the academics that used to hide in university labs. So everybody's trying to solve interesting problems with cryptography. And I think there's cool experiments that may come out of this. I mean, jokes aside, we're working on a proof of X. We're working on a proof of intelligence in our protocol. Not personal intelligence. Jack wins every time on that one. But computing intelligence. And I think there's kind of merit to say that there might be better ways of optimizing for in different systems, making sure that the use of resources that we are putting into these systems might have the opportunity to have secondary benefit. So instead of, in some proof of work systems, another criticism that often comes up is that it's generally brute force computing with, an output that is throwaway, right? It's not, it doesn't have kind of an external or externality in terms of a benefit. So could you potentially require compute that is also useful for something, right? And this is where we're kind of taking some of our research. But I don't see this as a negative thing, proof of X. I think we're constantly going to see new evolutions of these systems. What's different in this industry versus the last, I mean, the evolution of the internet to consumer applications, is at some point we stopped developing the protocol and we started developing the market on top of the protocol, right? So we had a point in time where TCP/IP became a standard, and then we developed layers above TCP/IP, and those became the standard, and then we all built businesses on those standards. I suspect in our industry the standard will be a moving target. I suspect it will adjust and evolve constantly. And we may find better ways and more efficient ways. And like the point I made earlier about if electricity goes to $0, then maybe we have to reevaluate the security of the Bitcoin system with a new method, right? So that evolution I think is healthy. It just means that it's very difficult. If you're trying to build a business and pick where to build it, it's probably a pretty challenging landscape to look across, because you don't know where the end solution is going to work or not work or be adopted or not be adopted. But generally, I think the state that we're at today, we're in the research stage of this industry, so the more ideas that get thrown around and tested, the better.
I see. So, go ahead first.
I agree with Matthew. I think right now the industry is experimenting with different ideas, right? Sometimes they look at it, proof of this and proof of that. It can feel funny, sometimes. But I think it's very important a step for the industry to look at things and to try it out. But for us, we're still sticking to a proof of stake, but we're trying to expand that stake what that it is, right? A stake owner, you probably not just money, not just your own coin. It could be something else, and that's why we're trying to figure it out and trying to implement in the near future.
Right, interesting. So yeah, I'd like to ask you a kind of additional question on this. So a lot of a new proof of X ideas coming up even in the long term too. So from the cross-chain transaction perspective, interoperability perspective, do you guys any other new findings or new technical or the business challenge? How to me there is some kind of technical issue there that interoperability between blockchain but based on a different proof of X model should have some kind of problem in the transaction model. What do you think about this?
Yeah, I think the point of cross-chain protocols is a realization that there is differences, I call them languages, an analogy. Blockchain number one is built a certain way. It has a certain mechanism of consensus. It's got a certain execution structure for transactions. And it's very different than blockchain number two that has a different consensus mechanism and a different execution structure for transactions. So the cross-chain's function is to act almost as the interpreter. How can I understand language A and transmit it in such a way that is understandable to blockchain B? That's, kind of the point and why these protocols are so relevant. And this is not too different from, again, simple analogy, but you think about Apple as an operating system for its computers and PCs and the operating systems that evolved around MS-DOS and Windows and the operating system we use in the PC world. These are different computing systems. Inherently, no reason for them to be able to understand messages that leave one and arrive in the other than the fact that they agreed on the in-between, and the in-between became TCP/IP, right? So that if I was sending a message off of an Apple and it needed to be received on a PC, different operating systems on each computer, that operating system still needed to be able to interpret that message, even if it came from a different kind of route. And it's more complex here because these are much more complex computing systems. But fundamentally, I think it's the same thing, and that's what we're trying to establish. And even the work that we're doing alongside Wanchain and AION at the Blockchain Interoperability Alliance is less so about standardization. It's more so about just testing different ideas in parallel, seeing which one works, and then we can all learn from each other's experiments and then adjust to get to the right answer. Because we don't know the right answer yet, right? So there's going to be different ways of kind of testing for that interpretation layer between blockchains.
Interesting. Yeah. So I want to have a question to Andrew.
So Origin Protocol, we're trying to go up against billion-dollar monopolies with open source software. And I think a lot of us are doing this. And I think it doesn't matter who gets it right to the end user. The end user just wants it to work for them. And so I'm glad we're having these conversations here. But these are not conversations that are going to be able to be repeatable by our users. So at some point we need to obsess over them, and at some point we need to think about how those are perceived by the public. And if we're going to fight about them, and that's the public perception, that's going to do us a grand disservice in the long run.
Yeah, that's correct. And also, I have a question to you because, from your experience as the founder of the Startup Weekend, it's totally, decentralized fashion, setup in event stuff. So, what kind of elements will be the key for us to, help each other or, learning each other about developing those kind of protocol layer?
So in 2004, I got a bunch of people like this in a room together, and instead of talking about what we do, I challenged everybody to start a company together. So let's get strangers together and try to start companies. And that opened up, and we created a nonprofit, and we ran it as a global events company, where we really didn't try to dictate what people did, but it got to 160 countries. It turns out entrepreneurship is truly the global language. Everybody, it worked everywhere. It worked in Bhutan, it worked in Kuwait, it worked everywhere. We were in every active war zone at one point. So entrepreneurship speaks. People want to create. People want to actually be in charge of their own future and their own destiny. So you've got to open it up. And looking back, I was trying to figure out and actually put words to what everything blockchain is now, as far as decentralization, as far as finding a way to trust everybody around the world. Slow database that everybody can trust is truly the goal. For currencies and for a lot of the protocols that we're building. So it's amazing to see it come to light, and it's amazing that a lot of smarter people than me are actually doing some amazing things with it. But 10 years ago, we were just trying to prove this concept that people could create together. And now we've got this tech stack where it's truly global, it's truly unstoppable, it's truly collaborative. The worst thing we can do is disagree to the point where we need to try to take each other down.
That's very interesting.
We need to look at the problems authentically and then build out solutions that really takes into consideration some really strong big players with a lot of money and the first person that's heard about it, that's having that first magical experience. But my goal, I hope that a year from now we're not talking about these protocol layers like we are right now. I hope we're saying, well, I have a user and their life is better because of this.
Yeah, that's the ultimate goal we are focusing right now. That's true. You want to go?
Let me add to that. For the Blockchain Interoperability Alliance, we're trying to figure out the standards, really. But that's a long way to go, right? I think we're trying to create something like HTTP for the World Wide Web. But it's a lot more complicated, right? Because on the blockchain, you are moving the information from one chain to another, but it's really we are trying to solve the double spending problem. On one chain, one blockchain, it's a lot easier, right? Everybody in the network, you can prevent the double spending. But when you have cross-chain, you have to lock it up the asset on one chain, and you spend it on the other, right? And vice versa. So the protocol itself will be a lot more complicated than the HTTP itself.
Yeah.
So, but we are looking at it. We have many different ideas. We're trying to come up with proposals. We're also open to the whole community, right, to come up with proposals. And we are working with associations and also with the government. Recently, there's ISO standards. They're trying to standardize the blockchain basic technologies, including the interoperability protocols. So we are trying to work with all these agencies and come up with roadmaps for us. So in the beginning, all the parties in the alliance will try to create our own little networks first, and then we'll connect with each other, and then we'll expand this network little by little.
Right. I think I totally agree with you, because one of the key differences compared with the internet is like, those kind of protocol development kind of historical things that happening in the blockchain is totally different from the internet, because internet protocol layer usually designing it led by like academic organization stuff. But now in the blockchain, because we can use the ICO, so a lot like market economy player, private player, does an experiments by themselves, and they try to sometimes it's competing each other, but sometimes learning each other to develop like what is the most like practical fit for the standardization protocol, but also the interoperability with each protocol. That's, I think, it's completely new trend. What's happening happening right now in this industry? Yeah, totally with you. Very interesting. So I have finished my whole 3 questions. So from now, I'm open to the question to the audience. So does anyone? Yeah, go ahead.
Hi everyone, interesting discussion. So I know that protocols are really important, but like from the business perspective, how does a protocol project make profit?
So I can take that. So at Origin Protocol, I mean, we're dealing with sharing economy. One of our founders had the great pleasure to have an Uber ride with the 30th driver for Uber. And after over 7 years, guess what he's doing? He's still driving for Uber, and he's not happy about that. So as a protocol, we're paying in coin, and they can choose to hold that. And hopefully, they become an investor by doing that. I think there's a lot of services you can build out as well. So you can offer the protocol and then offer the ability to build on that protocol, similar to like Pivotal Labs out of the States. There's quite a few business models.
Right.
Yeah. So for us, I think the model for us is we're treating this as essentially like an ongoing research and development activity to constantly evolve the protocols that we're developing. To fund that is essentially to tie ourselves to whether people believe in what we're building. And if they believe in what we're building, then the value of our ecosystem will increase, and the value of the assets that we hold will increase. And if they don't believe in what we're doing, then the value will decrease, and we'll run out of funding because nobody believes in what we're doing. And that's probably the right conclusion if nobody believes in what we're doing. So I think there's like a nice synergy here between tying your future promise to whether the community is supporting you, and that's reflected essentially in the price of your ecosystem, right? So if the community is supporting you, then the value of your assets is greater over time, and you can continue to fund yourself on the value of those assets. Doesn't mean we don't have to be smart and financially manage these assets effectively. We're still dealing in a very volatile market where some things happen irrationally, but over time, I think the rational trend will be that with enough support, the value of your asset will grow, and you can continue to fund yourself off the value of that asset. Beyond that, if it ever came to a point where this was necessary, I mean, there are lots of examples of nonprofit foundations in other industries that have funded themselves off of contributions and donations from people who end up using these protocols. Linux is a perfect example of that, that is funded by the collective of companies that build businesses on top of Linux. And I think there's a funding mechanism in there as well. In fact, that's kind of how we're building the Enterprise Ethereum Alliance. The Enterprise Ethereum Alliance is built off the contributions of its members. So about 400 members, all of whom pay annual fees to fund the Enterprise Ethereum Alliance activities. So there's a spectrum. But I do think, one point that I've been bringing up more and more is that I think it's important that we realize that there are protocols that will operate within business models, and there are protocols that need to be detached from business models, and that the governance structure around these non-profit protocols needs to be very well thought through. And I think, particularly ICO investors need to start asking these questions a little bit more before they start putting money in, because one of the challenges I see in the future is conflicts arising between capital tables, meaning like shareholders of companies, and coin holders of protocols, if there happens to be a disagreement of priorities, or a decision that needs to be made that is beneficial to one but disadvantages the other. That's the types of governing questions that we're so early in the industry, we haven't come across that yet. But I kind of envision that we'll probably start running into challenges where if you have these two different groups of stakeholders, you maybe cause conflicts down the road. But not in all cases. But I think there's some protocols where it's appropriate to make sure that you clean up that kind of accountability structure.
Right. No.
Let me build on that. I've worked in startups for 15 years. And usually you build a startup, you get some success, you try to raise venture capital, you go through the painful process of raising venture capital, and then hopefully if you've done everything right, you have an exit and the founder sees some money. Right? And then the company is in control of people that don't necessarily have the user in mind and don't really care about the future of the product. They might have bought it to kill it off or something. So with the ICO, with this market, we flipped that. We've kind of put that acquisition on day one, and we've put the founder in control and the community the first thing in mind. Yeah. And so there's a lot of positives and negatives to this. You're seeing a lot of the ICO madness and kind of frauds come up, and that's the biggest negative. But we don't get this opportunity often. So hopefully everybody in this room knows that and sees that this is rare. We see this once every 10 years, that we have this opportunity to build amazing software to delight people. Hopefully don't screw it up.
Yeah, but thinking about the sustainability of the one product, one software, that approach is actually more practical. That's what I'm thinking sometimes. Yeah, true. Good.
Yeah, just use the Linux as an example. You have the basic foundation. You shouldn't use as a profit-making mechanism, just like the foundation for each protocol we are doing today. If you want to make money, you probably have to build separate companies, for-profit companies, build applications, serve to the customers, and get a profit there. Right? And for the interoperability, protocols, right? I'm guessing that we don't have tokens for that, right? So I guess the community will give you a lot of honor and possibly some donations, right? In the early days, whoever invented HTTP or World War Wide, Tim Berners-Lee, right? He got honor, right? Turing Award. We'll probably create Turing Award in the blockchain industry. So, yeah.
That's great. I agree with you. Okay. Next question. I think there. Achu? No. Any other question? Who? Are you? We have 5 more minutes.
Yeah. Well, maybe I'll riff on something. Really
okay,
quick.
good.
I'm going to challenge everybody to realize, my question I want to ask or just point out is that this room is pretty packed. We go to these conferences all around the world when we do that. If ETH and Bitcoin price drops to $20 each, are we still going to be in this room? Are we still excited about the technology? Are we still excited about the community? And if your answer is no to that, are you trying to lead the discussion? Right. And I see a lot of people, the technology is just so amazing. We have such a big opportunity. We don't care about the price. We want to build the best tech. And then there's a lot of people that are really excited that Bitcoin is they're super rich now, and they're just playing off of that. So let's examine who we take advice from, and let's examine why we're in the game, if you will.
Yeah.
And I think that's a really interesting discussion and for this panel, but also just in the hallways of this conference. Is just let's look at why we love this technology and what this will do to the world and what this will do to have to cross borders.
And I think, you know, maybe to add on that, I think what's been missing in a lot of conversations is that the coins follow the protocol and not the other way around. Meaning, you know, today we have somewhat of an artificial market that's been created around excitement and speculation and people finding out about this for the first time. But it has not come with the adoption to support these prices, right? So you have to understand, I think, that these protocols, first and foremost, are mechanisms to build decentralized operating systems, to redesign businesses and societies, essentially. And the coins are the mechanisms to incentivize the right behaviors in those systems, right? So that means securing these systems and acting honestly with your counterparts and all of these things. The coin plays the role of security. But if we're using the coin without using the operating system, then the only logical conclusion is that the coin is worthless at the end of the day. So, and that it might take time to become worthless because there's a lot of excitement and a lot of speculation, et cetera, et cetera. But keep that in mind. I mean, this is the biggest frustration of most people in the Ethereum community is that the excitement around the coins picked up so quickly before the adoption around the technology picked up. And probably 99% of the transactions happening on Ether are speculative transactions, not operating system transactions, meaning not running applications and smart contracts, but just trading and speculating and et cetera, et cetera. Until we get to the flip of that, where 99% is using the operating system and 1% happens to be market speculators, that's a healthy ecosystem, right? So we need to make sure that the biggest thing we should be pushing for is adoption of the technology. And you know, there's some markets in the world, and I hate to say this in Japan, but Japan is one of them, where the excitement around the coin precedes the excitement around the technology. And I think we need to make sure that we're emphasizing the right things. So, you know, my perspective. But.
Yeah, that's really true. Oh, go ahead.
Yeah, I agree with that. I experienced the big market meltdown in 2013, right? 90% drop, right? I think a lot of, I heard a 70% or large percentage of the users, or we call it speculators, left the market at that time, right? And only the true believers and maybe the developers stay, right? And we all benefited a lot from that, right? I think market goes up and down, right? But at the same time, Matthew pointed out, for some coins, they will go to zero. I mean, not only $50, but they'll go to zero, right? For many different reasons. I think probably a lot of projects will be end up like that. So I think for the regular investors or for the community, we want to focus on technology. We want to focus on the real applications instead of scams and we call it error coins, right? Currently, just too much speculations. I think it requires government regulations. It's kind of a result of self-regulation didn't work, right? So the community tried to self-regulate it, but it did not work in 2017. So all the government agencies came out, issued very tough regulations on us. So right now we just have to figure it out, right? The whole community with the media, with associations, we will figure out how to make this industry grow healthily.
Yeah, totally true. I think thinking about the Japanese kind of characteristics of the Japanese market, and most of my investor or business people or like entrepreneur prefer or tended to focus on like a business perspective of the blockchain, like how are we gonna make money through the blockchain or something. But I think this approach is totally wrong. As you said, as you guys said, we should never forget the social context of this technology. So what kind of a social exchange or social transmission will happen through the blockchain is the most important item that we have to keep in its mind, because that's most of the things that we have to keep in its mind to tell other people how this software is so innovative. Yeah, so I think I really pray that and prefer that the Japanese startup people should discuss about this topic all the time. Yeah, but yeah, I think it's a good time to finish this session now. So thank you very much, guys. Thank you.
Thank you.